Let me go across to Peter McGuire, CEO of AustraliaTrading.com, joining us live at this point. Peter, great to see the festive celebrations there behind you in the shape of that Christmas tree, and I know holiday greetings to you as well. For oil, the story seems to have turned very, very clearly towards the negative in terms of oil prices, isn't it?
Good morning, Tamana. Yes, absolutely. Bearish, and you're prelude in 20-odd% down for the year. It's just been a bear market and it continues to slide. And where we roll over the next couple of months is going to be very fascinating. If US and the issue with Venezuela, certainly the first one, and then the second one as far as increasing production as far as the US. So I'm expecting oil prices to be lower going into well into first quarter, and by the time you'll hit Easter, I think they could be significantly lower than what they are at the moment.
Peter, season's greetings from me as well, and looking forward to the Christmas down under in the summer. But having said that, what is the view on the rest of the commodity space? Do we end the year on a high, and do we continue to see upside in your metal pack, particularly in silver, or do you think that with that gold-silver ratio now cooling off quite dramatically, that the upside at this point is capped?
Well, Alex, good to see you. I think that you'll end gold, if you're looking at 2 weeks today till the end of the year, will be New Year's Eve. I think gold will trend higher and will probably take out all-time highs. You're running at the moment that 43.50 sort of number. I'm expecting to be in the 4400s by that period of time. So over the 2 weeks, silver's back at 65.50. I think that'll probably trend higher to about a 67, 68 handle over the next 2 weeks. US dollars coming under pressure. We all understand the non-farm payrolls numbers and what's going on as far as, I think, risk on for a lot of those, the metals. Industrial metals also will have a run up from here. I think that copper will take out 12,000 over the next month or two.
You know, you mentioned, Peter, that you expect prices to go lower by Easter. What is the level that you're seeing for oil prices?
I think, Tamana, you'll be looking Brent, that early 50 sort of handle. I'm expecting WTI, the way it's fallen and you're now at 55, I think you've got to look at a 48 handle by Easter. That's very achievable for WTI, and Brent will be early 50. So that seems to be just that drag down. I'm looking at the big picture. Geopolitics can come into play naturally as far as the issue with Venezuela and how that unpacks. But I think the overall theme is going to be cheaper energy prices leading into the first half of 26, Tamana.
Peter, I know that you track currencies, and I'm not sure that you look very closely at the USD-INR pairing, but any opinions that you might have on the direction for the INR? The thesis, of course, is that if this trade deal is signed, then foreign institutions that buy now have the opportunity for a pop, because a lot of people are talking about 89 as fair value for the rupee, and it closed at 91 yesterday.
Yeah, I think you're probably right. I feel as though that, and as you just mentioned, those themes going in as far as the rupee, and also taking into consideration where that US dollar trends, I think that's going to be softer in Q1, quite simply because of pressure as far as Fed Chair Powell, Kevin Hassett. It's going to be an electric first 4 or 5 months with the tenure of the president of the Fed chair being removed and a new president, a new Fed chair coming in. And I think the overall situation is going to be softer US dollar, and that in turn will probably pop the Indian rupee up. And it's probably not a bad trade when you're thinking about the opportunities over the next couple of weeks and months.
Okay. Peter, thanks so much for joining us this morning. Pleasure speaking with you as always.
Thank you, Alex.